Read all the related documents carefully before investing.
Hey guys, welcome back. You're still tuned into Trading Hour on CNBC-TV18. It's still a 1.4% cut that we are seeing on the headline index. So 250 points gone over there. That is what we're seeing on the Nifty. The mid-cap index is seeing losses widen yet again. So, I mean, it's 900 points lower and 3% gone on the mid-cap index. That is where a bunch of the pain is coming through. Let's actually get a market guest in to help make sense of all of this. Sunil Subramaniam, MD and CEO of Sundaram Mutual Fund, joins us now. Mr. Subramaniam, good morning. Thank you very much for joining us. This is Pavitra. And clearly no signs of Santa Claus, right? I mean, on our market. So, and we have for the past week or a couple of weeks been moving to everything that's happening globally with no major cues really coming through, I guess, you know, up until the earnings season starts. How do you think it's going to move from here? Do you think it's going to be very range bound?
It will be range bound till the new year because remember, India's only few markets which have done better than the global markets. So year-end return is still positive. So because of that, profit booking by hedge funds and FIIs tends to happen during the December period, right? So that's why you will see a little bit of selling, especially where they have made the most gains. So you see segments like PSU banks, realty, those which had run up a lot in the past few weeks and months, with their profit booking. So I see this as a profit booking. Second is, like you said, the lack of direction, but I'll add to it the potential fear around the resurgence of COVID and how that's going to get managed. It's coming in pockets in various parts of the world. So market would like to wait and watch that. The third thing, yes, earnings season you mentioned, but also I think a big union budget is coming up for India on 1st February. So the noises around that are also going to mean that trying to second guess the numbers for the year and how Nirmala madam is going to spend the money. As you know, the first half year, the income for the government has been far better, almost double of what was projected. So there is room within the fiscal for the second half of the year and for next year to lay out an expenditure plan. And I think that's what is going to be a key driver for the market going forward. So I would say, yes, till the budget itself, I would expect a period of sideways movement and consolidation.
Okay, what about individual sectors? There is the IT space that comes out with its earnings. I think TCS is on the 8th, followed by Infosys on the 12th of Jan. So we won't have to wait too long. But are you expecting any incremental weakness in earnings? And what is the prognosis now?
No, I wouldn't expect, because two things. This is the festival season's full impact going to be disclosed in the earnings. That's number one. Number two, the previous quarter, you had an impact of the commodity prices rise impacting margins, right up to June. And then from July onwards, you've seen commodity prices easing. So I think that there will be a positive impact on margins. Numbers on the festival top line look good. How the bottom line translates. So I think there will be a sense of optimism around the numbers rather than a sense of weakness. But the more important point is the commentary on the future. I think this earnings season is also important to see how, especially the export-oriented sectors like IT and pharma, what are they saying about their order book? What are they saying about their customers in terms of their business for the rest of the year? That I think will provide clear direction to the market. So the emphasis would be equally on the guidance given going forward for the rest of the year as to the actual results for the quarter.
Okay, so that's about the IT space. One space that is doing well in a weak market like today is the pharma sector. That's the only index which is in the green. What is the outlook on pharma space? While IT continues to underperform, the other defensive sector that people usually look at is pharma. Do you think this outperformance will continue?
That's the answer to the lies in COVID. The fears for COVID and then the anticipation that, you know, pharma and diagnostic companies would have a lot more business is, I think, getting factored in. Otherwise, if you see, pharma is an export-oriented sector, and like IT, a global recession should negatively impact pharma growth. So I would say this is a short-term rally in pharma. And unless COVID wave goes stronger, then again, obviously, pharma will get buying support. So I think if we are able to tackle COVID properly, pharma should come back. So this is, I would view the pharma bounce back as more of a short-term phenomenon rather than as a sustainable, growth in that sector for the next year.
Okay, got that. Another space that I'm seeing, which is one of your top sector picks, is the auto space. How do you look at this space and what do you like within it? Because there's do you approach it with the two-wheelers, the EV play? Are you looking at the standard CVs? What do you like within the auto pack?
I think CVs are showing a good sharp up move because of the capex cycle reviving. You're seeing lots of announcements around private sector capex reviving in addition to the PLI and the government capex. So the logistics, movement of goods and transportation, right, is going to pick up tremendously. And I would say that the entire CV space, MHCV, light heavy commercial vehicle, all of that should see a big good cyclical recovery. So that's our top pick. The second, I would say, is that the good crop for Kharif and expectation Rabi would mean rural demand. I would favor the two-wheeler sector. So currently the market is not reflecting that. I would expect rural demand to drive two-wheeler growth significantly. On the EV side, I think the market is playing valuations on EV side. I don't see demand for EVs as being so critical now, but EV infrastructure is a key play. So those companies, auto companies which are investing in EV and the supplies to them are a key part of our value proposition.
All right. Well, the market seems to be in a free fall mode right now. The Nifty is down 257 points. The Sensex is down over 800 points, and this is not a small cut by any means. I mean, just look at that. At the lowest point of trade, given up on all key levels, whether it was 18,000, 17,900 is gone now, and the Sensex is just sitting at 60,000 by the skin of its teeth. It's holding on to it. So at any point in time, I think the 60,000 level would also be breached. Sunil, just a quick comment from your end. Is this a time to raise cash levels, or do you think that, one shouldn't panic?
One shouldn't panic. I'll tell you why. Because if you look at the fact that between COVID and September of 2021, almost 3 lakh crores of FII money came in. Between October to June, 2.5 lakh crores of that money went out. But from July to now, only about 90,000 crores has come back. So the Indian market has the capacity to sustain 2.5 to 3 lakh crores of FII flows. 90,000 crores only has come in. There's 1.5 lakh crores of FII flows waiting. And this correction is because one of the things which was worrying people was that markets are rising when world is kind of slowing down. And so the valuations and everything was being questioned. This correction, I think, gives a kind of a breath. And I would say this correction is a bull market correction in our thing and not a bear market rally that happened in the past few months. So from that point of view, I think this letting off of steam by the market, what's happening this week, is very good because it'll encourage FII flows back again. But the key factor to track, and which we haven't talked about yet, is the oil prices outlook. I think for FII money to come back to India, there has to be clarity around the oil prices, which have to show a declining trend. Today, the fact that the US decision on a price cap has diverted European buying to Saudi Arabia and OPEC countries means that oil prices are not dropping as much. Second is the winter season is on in the Western world. So come February, March, you will see both the winter give way to spring and summer, and you will start seeing the rate hike impact on the slowdown start coming in more, and so oil demand should come down, and there would be a clarity around the oil dropping from its current level to the 70s and the 60s. Then I would say FII flows would come back really strongly. So the quantum of FII flows waiting on the sidelines, I think, is the biggest positive for the Indian markets, and which should sustain it in the year 2023.
Point taken. Sunil, thank you so much for joining us and giving that expert advice on the market moves and the outlook going forward as well. Time for a short break. We'll get you more on the market on the other side. Stay tuned.